Good evening, my people. I hope that you are well. Welcome to episode 2 of the Accounting Officer. Colleagues, before I start with this episode, I would like to take a moment to thank all of you for the wonderful reception that episode 1 received from you. I thank you for the comments. I thank you for the messages of encouragement and support, the messages that also bring forward topics that you wish for us to cover. I would like to assure you, colleagues, that we will cover those topics. Colleagues, I also thank you for the comments that you have made, the subscriptions on YouTube, the following that I received. I actually thought this accounting officer page is actually doing well in terms of following than my actual personal Facebook. But for those who are new, colleagues, on Facebook, the page is called Accounting Officer. It's the same name also on Instagram, Accounting Officer. On YouTube, it's the Accounting Officer, and then TikTok, it's Accounting Officer SA. So just to recap on what we spoke about last week, we touched on expenditures that are incurred before the budget is passed in Parliament. We spoke about the consequences of this expenditure. We also spoke about qualitative and quantitative limitations around this expenditure. For those who haven't watched the episode, I encourage you to go and watch the episode. So today, colleagues, we will be talking about expenditure still. I wish for us to gain an understanding of these expenditures before we start jumping deep into the legislation that we're going to be discussing. So today we'll be talking about unauthorized expenditure, irregular expenditure, fruitless and wasteful expenditure. So I like to call these terms terms of mass destruction when it comes to expenditure in the public sector, because these terms often bring some element of discomfort in people in the public sector. When everyone hears unauthorized expenditure or fruitless and wasteful expenditure, there's an element of discomfort that comes. I hope that we'll neutralize these terms today so that we help you understand what these terms are about. So if there's still time today, colleagues, we will also touch on who the executive authority is, who the accounting officer and the accounting authority, the difference between the accounting officers and the accounting authorities, also together with the executive authorities. So as I said, colleagues, these terms of destruction, terms of mass destruction, if you're looking at the PFMA and you're looking at the MFMA, you'll find that in essence, these terms mean more or less the same thing. The PFMA is more concise, but the MFMA is a rock star. It likes to go wild. It likes to explicitly mention things. But in essence, these terms are basically the same thing. So let's talk about unauthorized expenditure. Unauthorized expenditure is basically overspending of a vote or a main division within the vote. Today we'll pick on the Department of Health, and we'll also pick on Tshwane municipality on our examples. So the Department of Health, on its own, the term Department of Health is a vote. When we refer to a vote, it's an appropriated amount that relates to health within the public sector, which of course is managed by the Department of Health. So when we say overspending of a vote, so maybe health is allocated 500 million and health decides to go above that 500 million, then that excess amount is unauthorized expenditure. So when we talk main divisions within the vote, main divisions, health might have programs that they are going to be doing in their vote. So that would be your health systems, communicable and non-communicable diseases, if I remember correctly. So divisions within the vote, if the communicable and non-communicable diseases is overspent, then that excess amount is unauthorized expenditure. It's not to say that if the health system's vote actually has some savings in it, that money can't be perhaps transferred to the other division in order to avoid in order to avoid overspending. That is possible, colleagues, and that process, I think it's called the viament. It also has to go through its own approvals. If they feel that they are going to overspend in a certain division, they can be able to get some savings from another division to basically fund the division that is at risk of overspending. But again, it has to be authorized properly. The PFMA actually gives guidance around it. I'll have to check the MFMA if it has the same process, but I would like to think so. It also has the same process, or it might term it differently. But I think I've seen the term viament on MFMA as well. So the second part of unauthorized expenditure, it's expenditure not in accordance with the vote. So when we say not in accordance with the vote, it's not in accordance with the purpose of the vote. If the purpose of communicable and non-communicable disease is to fund activities around that, maybe testing of TB, testing of HIV, we can't be finding that amount funding other programs within the vote of health and not actually funding the activities of what it was intended for. So I think I made another example. I made an example last week to say we can't find the Department of Police building a hospital out of nowhere, whereas we have the Department of Health that has an appropriation that might have money set aside to build hospitals. Police is supposed to build police stations. It can't be found building hospitals. Sorry, colleagues. So the second term of mass destruction, I think this one is the most famous one. It's like the Beyonce of these terms of mass destruction. This is irregular expenditure. It's very famous. You see it everywhere. It's just there and it's always associated with SCM. But the paraphrased definition of irregular expenditure, it's a financial loss as a result of a non-compliance. It might not be a financial loss, it just could be a financial impact as a result of a non-compliance. So what do I mean by this? So if, for instance, suppliers are not paid within 30 days, as the PFMA recommends, if there's any interest charged there in that non-compliance, then that interest will be the irregular expenditure. If there is no interest charged, it will just be a non-compliance, normal non-compliance, because the PFMA is clear that suppliers should be paid within 30 days. Let's perhaps make this example practical. Let's say we did not pay our internet service provider. We got an invoice from our internet service provider for about 100 million, and we did not pay this internet service provider on time within the 30 days that is legislated. So this internet service provider ends up charging us interest of 10%. If the invoice was about 100 million, they will charge us 10%, which is basically 10 million. So that 10 million element is the irregular expenditure in this case because it came as a result of non-compliance. It can be linked to a non-compliance within the PFMA. So between the MFMA and PFMA, it's still the same thing, irregular expenditure. The MFMA may be explicit about Municipal Systems Act, the policies of SCM in that municipality. It's basically the same thing. It's a financial impact as a result of non-compliance. So the next one, term of mass destruction that we'll be talking about, and we will still carry on with that example that I made of not paying our service provider the 100 million on time. The next one is the expenditure which relates to fruitless and wasteful expenditure. The definition is expenditure which was made in vain and would have been avoided had reasonable care been exercised. What do we mean by this? Let's go back to the example that I made. Let's say before we make the example, let's just define what made in vain is. Made in vain is basically spending without getting any value for what we are spending. Ne? It's like going to my friend's shop and just leaving my $10 there and going and not buying anything and not getting anything for my 10 rands. So that's what expenditure made in vain is. So going back to our example, to make this thing practical in the public sector, let's say the PFMA was silent about payment of suppliers in 30 days. But the contract that we signed with the supplier was saying, if you don't pay our invoices within 30 days, we will charge you a 10% interest. Then in this case, that 10% would be fruitless and wasteful expenditure, because it's expenditure that is made in vain. Had we paid our supplier per the terms of our contract, we would have avoided this 10 million penalty. We would have avoided paying this 10 million penalty. Again, had the PFMA been silent about the 30-day rule, and then it was just based on terms with our suppliers on the agreement that we signed with our suppliers. So, colleagues, that concludes the terms of mass destruction, and if I missed anything on them or I did not make a proper explanation, again, feel free to engage me. I tried to make the simplest examples around it. Looking at time, I think we still have time, colleagues. We can talk about the people that I spoke about, which is the executive authority, the accounting officer, and the accounting authority. So when we're talking about an executive authority, focus mostly on the politician, because executive is just a member in the executive. It could be a member in the executive council. It could be a member in just the executive. The executive is the political structure that is directing that department. So if we're talking about executive authorities, we are talking about cabinet ministers in the case of national departments and and national entities. We are talking about cabinet ministers. For instance, we have the Department of Sports. The minister there is Mr. Gayton Mackenzie. That's the executive authority, Mr. Gayton Mackenzie. But when it comes to provincial government, then the executive authority would be the MEC responsible for that department and its public entities. So basically, the executive authority is someone accountable to Parliament, whether it's the National Assembly or it's the provincial legislature, on affairs of that department or entity. So when it comes to municipalities, the executive authority would be the mayor. So the mayor is accountable to council in this case. Council is the group of political parties basically being represented by ward councillors or just councillors who are representing each political party. So the mayor would be the executive authority of a municipality in this case, because they are accountable to the council on affairs of that municipality. So when we talk about the term accounting officer or accounting authority, we are merely speaking about the executives now. We're no longer talking about the oversight or the people who are members of the executive council, the politicians. We are now talking about the executives who are running the day-to-day business of that entity or that department. So it's important to note the difference also between the accounting officer and the accounting authority. The accounting authority is applicable to entities. The accounting officer is applicable to departments. So in the case of a department, the accounting officer would be the head of that department, basically more like the CEO of the department, would be the head of that department. The MFMA, by the way, also uses the same term of accounting officer. So MFMA, you would know, it might be divided into two. It's local municipalities, which are generally smaller municipalities, and it's also metropolitan municipalities. So on local municipalities, this would be the municipal manager of that municipality. And then on metropolitan municipalities, which are generally bigger municipalities, this would be the city manager, because metropolitans are often municipalities of cities, basically. So this would be the city manager. That would be the accounting officer. So as I mentioned, accounting authorities are applicable to entities, whether it's a municipal entity or it's a public sector entity, so it's a PFMA entity. So in the case of a municipal entity, the accounting authority would be the CEO of that municipality. I think the MFMA is clear on that. And then in the case of a public entity or a PFMA entity, it could be a trading entity, it could be anything, it would be the CEO of that entity. But if that entity has a board, then the board would be the accounting authority of that entity. Or if that entity has a specific legislation that says that the accounting authority will be this person, then that act will be followed. The PFMA allows for that act to be followed. But if there's no act that is clear who the accounting authority is, then we will follow the provisions of the PFMA. So colleagues, I won't be touching on the duties of these accounting officers or the accounting authorities, but I'm happy to discuss this on another episode should there be a need. We can go through basically the fiduciary duties of the mayors, or let me just say the fiduciary duties of the executive authorities and the fiduciary duties of the accounting officers and accounting authorities. Both legislations, the MFMA and the PFMA, are actually clear on these fiduciary duties, and they are pretty much straightforward, colleagues. There's no subjectivity or vagueness in them. And part of the duties that they have is to prevent the terms of mass destructions I mentioned. Of course, you won't find that terms of mass destruction on legislation. You will find unauthorized, irregular, fruitless, and wasteful expenditure. So, colleagues, this brings us to the end of this episode. I hope that I've interpreted everything well into your understanding. And if I missed anything on the interpretation, I always encourage dialogue. I always encourage engagement. Let's talk about it. I'm also not even though I'm aspiring to be a subject matter expert in this legislation, I might also miss some things, and I'm happy to engage, and especially people who work with these acts. So as I conclude, colleagues, those who haven't followed us, again, please follow us on the Facebook page and the Instagram page, which is the accounting officer. Please like and subscribe, comment on YouTube as well, but subscribe, please. On the accounting officer. On TikTok, we are also available. It's the accounting officer SA. Colleagues, thank you so much. The future topics that we'll be talking about, maybe let me rather mention it here. We will also talk about, we will spend a lot of time, in fact, on supply chain. We actually need to understand the process of supply chain and the type of non-compliances that arise on supply chain, which most of the time lead to irregular expenditure. So let's talk more on it. And then before we start talking about areas of financial misconduct and consequence management, they are always as a result of some sort of process not being followed properly. Colleagues, thank you so much. Have a good evening.